Hello and welcome. I am your host, the best podcast host in the universe, Steve Cully. I'd like to thank our sponsors at Procyon Partners. Procyon, one of the top 50 fastest growing companies in the nation. They specialize in employee benefits, wealth management, and retirement planning. President Sean Rabinowitz, proud supporter of our podcast network and everything we do. Green Street Trust International, owned and operated by Rennell Jump and UConn legendary men's basketball player Jake Voskuhl. They specialize in tax plans for businesses large or small. They will save you money or get you a big fat return on your taxes. To schedule your free strategic tax planning session today, go to www.greenstreettrust.com. Pete Finch and the Finch Law Firm is located in Bridgeport, Connecticut. If you've suffered any type of personal injury, slip and fall, car accident, your mother-in-law ran you over with her car, your wife got angry one night and decided to stab you, the Finch Firm is for you. Pete has won legal battles all across the state of Connecticut. He will go to war to get every dollar you deserve in compensation. You just have to remember, in a pinch, call Finch or go to his website, thefinchfirm.com. Dynamic Human Performance is owned and operated by UConn legendary running back Andre Dixon. He trains boys and girls of all ages, all sports. He has a boot camp program 7 days a week, 6 a.m. You want to get in shape, you go to Andre. He has an athletic development program where he trains boys and girls in the sport of their choice from the ground up, helps them reach their full potential, be the best they can possibly be. Andre has sent boys and girls to college on scholarship for all different types of sports. To work with the best, he has a 5,000 square foot state-of-the-art facility in Hartford, Connecticut. Go to www.dynamichumanperformance.com. All right. And here we are for Luther James Insurance. We hope everyone had a wonderful Christmas and preparing for the new year. And with me, James Whitfield, Luther James Insurance. James.
Happy New Year's Eve.
It is New Year's Eve. That is correct. I always love New Year's Eve.
Yeah.
So we had a phenomenal show last week. Another 20,000 viewers.
Nice,
so you're becoming quite popular with everyone. So
thank you for everybody who tuned in and who's tuning in today.
Yeah.
Thank you. Spread the word.
Yes. So everyone had some questions. One of them was, sorry, not that one. Do people get term life insurance and whole life insurance policies?
Some do.
I know some do. Okay. What is the benefit of doing that?
Well, with term life, it's what it is. It's a term. It's a period. It's a point
of time, right?
You know what I mean? So you may have some people who will get a policy like that because they might be traveling for work and they're they may be a high level person and they're the breadwinner for the family. So in case something happens to him while he's on this trip or what have you, family's taken care of right away, if something tragic happens. A whole life, most people, well, at least the people I deal with, I show them how to use it as a savings tool. I don't want to say the investment because I'm not a life
exactly
financial person, but I show people how to use those particular policies as a bank account, and it gets better return than most stocks and 401ks and things like that, or interest-bearing accounts.
So another person asked, and I've never heard of this, and I've never even heard you mention this. What are accelerated death benefits?
I have no idea. That's the first I've ever heard of that.
Okay, that makes sense then.
Because when something gets paid out, depending on the company, they'll either pay it out right away, or if there's something in question, insurance companies tend to look at the documentation and the cause of death and things like that to make sure that.
Oh, I see what they're saying. They're saying that some policies will allow you to collect some of the death benefit.
Yeah, but that's every company.
If you're alive and become terminally ill. Have you ever heard of that?
That's not accelerated death benefits. That's living benefits.
Okay, so you got the term wrong. There you go.
Yeah, that's living.
So that is possible.
That is possible, and that's the majority of the companies I deal with. When I give somebody a policy, they're entitled to living benefits. So that's terminal, chronic, and critical illnesses.
Oh, okay. So now we've talked about this. If with diabetes is one thing. If you have high cholesterol, if you have something like that, is that going to limit your coverage significantly? Or, if you have a more serious health condition like MS or Parkinson's,
you're not going to get you won't get anything. You can get a final expense policy, but like something like an IUL or term.
Right.
Because insurance companies, their thing is not to pay.
Of course. They don't want that.
No.
So in IUL, I was talking with my uncle.
Okay.
And he does not believe in IULs. And I wanted to hear why you do, so I can tell him.
What's his reasons of not believing in him?
He's old. He's 73 or 4.
Okay.
But he bought a bunch of IULs before, and he doesn't believe in whole life insurance. He believes in term life insurance. He's always had term life insurance.
It's the worst.
And yeah, that's what I told him. I said that you said it's the worst, and he was very surprised to hear that.
Yeah,
and he did not understand why.
He might have bought his policy. I don't want to name the company because I'm not trying to
right.
to promote it. But in the chat room last week, I had somebody from the same company try to sell the same stuff where they say buy term and invest the rest. I always ask people, what are you investing in? If you're buying term, what are you investing in? So with whole life insurance, you have the ability to do both. You have a death benefit, and you have the ability to build cash if you properly fund your policy.
Right.
So like
properly funding.
Your uncle's deal is he wants to pay a certain price and get a certain amount of death benefit, but what he fails to realize is you don't get any benefits from you paying all that money out for all those years. You get no benefits in that.
Right. And year after year, you're paying.
You're just paying money out, and the insurance company's collecting, saying thank you. You know what I mean? But you're not getting any benefits from it. With whole life, you can borrow money from your policy. If you fund it properly, you can borrow money from your policy. You can create a tax-free income with whole life. You cannot do that with term.
Okay.
Term to me is you're buying a policy at $50. You get $1 million death benefit, and you have 20 to 30 years to collect that. But what happens is, especially if you're young, you're going to outlive that.
You're going to outrun it.
And you don't get a return of premium. You don't get your money back. And when the time runs out, now you're renewing, and you're renewing at the current age that you're at, which makes it more expensive. Whereas whole life, you pay for that policy not one time, but that from the age you started at last until the policy is over. So if you started young and you paid $25, $30 and you got 150,000, 200,000 in coverage, that 20 to 50 bucks that you're paying at 20 is the same price you're paying at 40 or 50.
Right. That makes sense. That makes a lot of sense. So I can come back with him at that. That's going to be fun.
I can sit there and do that with him all day.
I was gonna call you if it wasn't Christmas Eve. I was gonna call you.
Term is good for a period of time. If you need insurance in the short run and you don't want to spend a lot of money, and like I said, if you're using it for a particular thing where, like I said, you might have to go to another country to work, like you're a contractor or you're a CEO, and you need some quick coverage real quick. That's what term is good for, but it's not permanent. It's not permanent insurance. That's why it's called term.
So can you describe what the life insurance underwriting process, the method that carriers use to assess your risk?
So
it's based on several things.
There's different levels of carriers, so you might have the high level carriers, I don't want to name them either,
Right.
But high level carriers, if you're dealing with high level IULs or annuities, you don't have to do a health assessment for it because it's just money you're putting in. But for like an IUL or a high level whole life policy, they'll go through your MIB records. They also may, and most of the times they do, depending on the age, they'll ask for blood and urine. They'll send a nurse out or have you go to a lab and get tested. And then they examine your blood and your health history to make sure that you're able to not just financially fund that policy, but to make sure that their risk is lower. So they know.
Oh, okay.
Yeah.
Okay. So that makes sure that your risk is lower.
Yep. And then you have final expense companies where, if you're an older person, if you're like 50 to 75 or 70 years old, and you didn't get life insurance when you were younger, most of them go off of your MIB report just to make sure that their risk is minimalized. And that's how they don't do the blood and urine. They just check to see if you had anything in the last 5 to 10 years that's critical, and that's how you get insured.
Now, the plan that you showed last week, it showed that you can take a loan out against the cash value of your insurance policy.
Mm-hmm.
How many are there a certain amount of times you're able to do that? Like if you want to do that 5 years in a row, can you do that?
As long as you have money in it, that's in the policy. Yeah. Don't look at the death benefit. You look at the cash value.
But you would not typically advise someone to do that.
They can do whatever they want. I mean, it's their policy. If you're building it to build up cash, then why not? Because you can use that. You can use the cash in your policy to buy a building. You can buy a car. You can buy a house if you fund it properly. That's what I try to show people, how to fund it properly so you can do all of that. If you funded your policy, let's say you did 10 grand a year, and you're 20 something years old or you're 30 years old, you did 10 grand a year. By the time you're like in your 50s or 60s, you should have well over 200 to 300 grand in cash. And this is just going off the top of my head. is just going off the top of my head. You should have well over, you know, 200 to 300 grand. And if it was a car that you wanted to buy, why go to the dealer and do a bank loan when you have this money sitting in your policy that you can pull out cash and pay it or not pay it back? Because if you don't pay it back, it just comes out of your death benefit. But why would I go and ask a bank for a loan when I have a policy? And this is stuff I try to show people.
Right. And that makes a lot of sense.
Yep.
Because that money adds up, and it adds up fast.
Compounded interest.
The compounded interest of it adds up fast. There is so much you can do with it. And unlike the term life insurance, which really handcuffs you.
Yep.
It truly handcuffs you.
Yep.
So this was a question. Are you familiar with pet insurance?
Yeah.
Oh, you are? Okay.
Yeah. I know people who do. I think it's good to a point. It's the same thing. Like, I mean, you can't build any money off of it, but you know,
no.
The vet bills are not cheap.
No, they're not. No.
So I suggest anybody who has pets and they want to maintain, they want to maintain their pet's health. I would suggest pet insurance, because, you can pay $2 to $3 grand for x-rays or something like that, or just the examination if they got a little stomach bug. So why pay that out of pocket?
Now, the question was, would it cover, like, if your dog or cat were to need like a surgery or anything like that?
It should, yeah. It's like health insurance.
Oh, so it does cover everything. Okay. All right. That makes a lot of sense.
And depending on the company, I'm assuming it does burial too.
I'm
not 100%. Don't quote me.
No, I know.
I deal with people.
No, I was surprised. I was surprised to hear that. The pet insurance, and if it did cover everything, but it's not the same as life insurance.
No, you're not. Well, it's life insurance for doggies and cats.
Yes, but you're not building up the same amount of wealth that you want.
No.
Okay. So, disclosing your income on your application, and we've said this, you're going to find out anyway. So if you make $20,000 a year and you want a $20 million insurance policy, is that possible, or will the premium just be high? Okay. So it's not possible to get that.
Not at all.
Yeah. No way.
Well, you have to look at it like this. There's a criteria for you to fund something that high.
Oh, okay. Yeah.
So like for argument's sake, the best policies I like to do is for business owners who's got over $5 million in assets or net worth. I can finance their policy to get them a 8 to 10 figure income tax free for life. You can't do that making 20, 30 grand. Now, if you put all your life savings in it, if you're making that little bit of money, you want to get a second job and figure out a way to double if not triple my money, then you can, depending on the age, if you make 20, 30 grand a year, if there's a way that you can put that kind of money into a policy for 2 to 3 years, I can show you how to double if not triple that.
Wow. Double or triple that. Okay.
And health. It also has to play on health as well.
I can't believe this is a question. If you're a convicted felon, does that affect you getting health insurance?
Health
Or,
insurance,
life,
life insurance.
sorry.
Yeah,
Life
well,
insurance.
it does.
It does?
Yep.
Oh, I thought this guy was just being an asshole.
No.
So if you're a convicted felon, they won't
felon
give you life insurance?
will not give you life insurance.
What?
Because you're dealing in criminal activity, even if it was one time. That's how they look at it.
So even if like if a time period passes,
yep,
do you have a chance to get it?
Will not.
Will not. Wow.
I had somebody who had a 22-year-old son. He had like 2 or 3 speeding tickets. He got rejected, and he's not a felon.
Oh,
he's a risk. 3 times speeding.
Right. So,
and he's young.
Yeah.
I was shocked.
So, and you obviously work with several different companies, so you submitted him, I'm sure, to different companies, and he got denied by everyone.
Four different
companies because of 2 speeding tickets.
Yep, 3.
Were they like 80 and a 20 or something like that? Was it reckless or
speeding is speeding? So
it doesn't matter if it's 3 miles over or 20 miles over.
It's even worse if it's reckless.
No, I figured that.
Yeah,
but that's shocking to hear. Wow. So if you have life insurance through your employer,
still get insurance.
That's possible.
It's possible, but you got minimal coverage.
And if you lose your job,
it's gone.
Okay. Oh, okay. That's why.
That's why I try to tell people, just because you got it through your job doesn't mean you're going to be in your job forever. I've seen people who've been on their jobs 20-something years get fired.
And so then they end up with nothing. And they have to get
and you got to start off from scratch. Yeah. And on top of that, the insurance you get at the job is not building cash value. It's a group policy that everybody qualifies for because they're all sharing the same risk. So no one's paying more than the other or less than the other.
Now, I think this is what you've talked about. Universal life insurance, is that just an IUL?
It's what it is. So an IUL an IUL and a universal is in the same family, but they're different because an IUL is on an index. That's what the I is for. It's an index universal life insurance.
Oh, okay.
So the index, you're guaranteed to make money on the index, meaning if the market gets an increase, you get a certain percentage of that increase. So if it did 200 points and, let's say you're eligible for 6 points, you're getting 6 points of the 200 points, but you're still getting a gain. So your money is still making money.
Oh my God, my friend Christy. If you have life insurance through your company
mm-hmm.
and you die, mm-hmm. does your company get any benefit off of it?
If you never set a beneficiary, yes. Okay,
so if you had set a beneficiary, your company does not benefit at all.
Correct. So like if something happens to you and you left it to a loved one, then the loved one gets the beneficiary. But if you didn't do anything, if you didn't assign anything, then the company gets
it. So when you are working with someone and you're doing the underwriting, how many companies will you typically submit the policies to?
So I don't work like a car dealer.
So you have a go-to?
Yeah, I have a couple of go-tos. So what I'll do is it all depends on the age and the health of the person.
Depending on the person, right? It's different for everyone.
Yeah. So in, if this person is relatively healthy, I'll say, hey, I'm going to take her to North American.
Yeah,
And,
so and so, right.
yeah, and then go through the underwriting there, and then if it doesn't work out, then I know so and so will take her. You know what I mean? So I don't submit to a bunch of people all at once, because then that's like, it's a lot of paperwork for one, because I have to do everything manually. You know, I don't type your info and then it goes to a database for like 5 or 6 different companies. I do it one by one. So I don't
Okay.
yeah.
And I
get people
believe
asking all these questions, but none of them are contacting me through my website for information. Not one.
Okay. Okay. So we have bankruptcy. Does bankruptcy immediately get your policy denied?
No.
It does not. Okay.
I mean,
So,
it depends on what kind of policy you're going for. Depends on what kind of policy you're going for. But generally,
if you're healthy and everything, you declared for bankruptcy.
I mean,
you can
now
still get something.
If you're doing something like an annuity, it's going to ask you, did you declare bankruptcy in within the last 10 years?
10 years. Okay.
If you're doing an IUL, it's going to ask you that same thing, because that deals with cash value stuff. But if you're doing like final expense and all that stuff, it's not going to bother. Term, it's not going to bother.
Okay. I got you.
Yeah, but whole life, it will ask.
So when you get a whole life policy, is the death benefit part of the whole life insurance policy?
Yeah.
It is. Okay. So it's not, or I'm sorry. I didn't mean that. I meant final expense. Is that part of whole life, or is that separate?
Yeah, it's a whole life policy, but it doesn't collect any, depending on the company, because some companies do collect a little bit of interest on your premium. Some final expense, yeah. Not a lot, but yeah.
Okay. As we talked about, you work independently from companies. Can you explain some of the advantages of working for a company as opposed to working for yourself?
So I'll give you the best thing about it. If you work for a company and a company sells a certain product and that's all they sell, and you see opportunities elsewhere where you know you can make yourself a nice little commission, or you're doing somebody a good service. Because I'm both. I did W-2 and I did 1099.
Right.
The company I was W-2 with, it was an insurance company. I'm still with them. The cool thing about it is they gave me the ability to go independent.
So you can do both.
Yeah. Now there's some companies that won't let you do both because they're in competition with the independent carriers. The cool thing about being an independent carrier is you work when you want. You know,
sure, and you can work with who you want.
You work with who you want, when you want. You know, it's a total different mindset. So when people who have been, working in the industry or working in an industry where they've gone, punched a clock, sat at a desk, and at 5:30, 6 o'clock when they leave, insurance ain't for you if you're not going to change your mindset, because it's not a clock punching business.
No.
You get out of it.
Really part of their life.
Yeah.
For forever.
Correct. Now, one of the cool things, I mean, listen, being an independent isn't as cracked up as you think.
No, you got to hustle. I mean, it's on you.
Yeah, you get out. I mean, there's days where I haven't made anything in a day, and then there's days where I wrote up 50 to 60,000 in business in a day.
Right.
So it has its ups and downs, but it's something where you have to stick it out to see if you're cut out to do it. If you're gonna fold in the first 6 months, or the first year or two, it's not meant for you. It's not meant for you.
Right. No, I get that. I get that. Because I mean, you're gonna be on the clock, and I know that you're someone who will take calls from people at any time, any day. It doesn't matter. If they have a question,
I've taken
you're going
calls
to
on
be there to
vacation.
answer.
I'm on a cruise ship taking phone calls.
Yes. And that's why I think it definitely sets you apart from other people who sell insurance, who do punch a time clock.
Yep.
And when 5:30 hits, they're not answering their phone.
Nope.
So you're answering your phone all hours of the day. And you truly value your clients.
Yeah.
You want what's best for them.
Absolutely.
You care about them. It's not about, obviously you're making money, but it's not all about that. You truly care about them. You want to see them do the best they can for themselves and their family.
Correct.
Okay. So can you describe the process of getting life insurance for children?
Same thing as an adult. So if you're doing insurance for your kids, you have to have insurance. The parents have to have insurance also.
Also, right. But does it have to be through the same company?
No.
Okay, so you can get it through whoever you want. Does it matter of the age of the child?
No, the child can
like
be an
if
infant.
You just have a baby, you can get insurance on it.
Child can be an infant, yeah. And I think for infants or like toddlers and stuff, I think the minimum death benefit is like $1 to $2 million.
Okay.
Now, you would be setting your kid up financially if you start when they're a baby and you do like, I don't know, $1,000 for the year.
Right.
You know what I mean? Something, something not a big deal. And I can help you kind of do a college fund for your kid.
Well, no, that's what I was gonna talk with you about, because Julius has several players of his kids that are going off to play college football. And we were talking about setting them up for life insurance policies.
Yep.
Now, if they play a sport, is that something that could hinder them at all?
As long as they're not doing professional wrestling.
You had to go there. You had to go to my sport.
Or jumping motorcycles or bicycles. They're fine.
Bungee jumping or anything like that, rock climbing. Yeah. Okay. So if your kid is going off to college and they don't already have insurance, that is obviously, as you mentioned, the best time for them to get insurance.
Yep. Yeah, because then they're set up by the time they're leaving college, or they might be in the 5th or 6th year of their job after graduating college or something like that. Like, to be honest, the best, like if you're concerned about your children going to college and you paying for it, do it in a policy. You come out way ahead. You don't have to do any bank loans. You don't have to do any student loans. If you build it properly and be consistent with it, it'll do you a bit of good. It'll do you a bit of good just doing it through life insurance.
All right.
Because think about it. You're paying, like, let's say you want to send your kid to Princeton or something like that. What is it, 50, 60 grand a year?
Try 90.
Well, there you go. My daughter went to St. Peter's and I was paying 50. And this is before I was selling insurance. Yeah, I was paying 50.
Oh
So
my God.
so I have for her, I got a $40,000 bill that I have to pay for student aid.
Is St. Pete's, was that in Philly or Jersey?
Jersey City.
That's what.
The
Okay.
year she graduated was the year they went to the Final Four.
Okay, I remember that.
Yeah.
All right. Hello, Jamal. So Jamal has 8 kids. He is curious to know how expensive it would be to get insurance on 8 kids. Is that costly, or is it something where
It
he should
depends on
get?
it
They're
depends
they're
on what he
they're
wants to
young.
do. They're
Oh,
young.
yeah, they're young.
I might be able to do something like a group policy. I have to see, but if not, it all it depends on what kind of money Jamal makes.
Right. He's the one in the military. I think he's pretty well off.
Oh, okay.
Jamal, I'm sorry, I'm telling everyone that. But yeah. But yeah, so okay, so it depends on his income, and it depends on what he would want to do. You could
Yep.
do a group policy
It's possible.
where you could insure all of his kids, is what you're saying.
Right, but then it'll be something like, I have to work it out, but it might be something where it's like who's first to go and all that stuff, and I hate playing that
Right,
game.
right. I got you. I
don't like doing that game for people.
Okay. My other friend, he is a principal in Florida. He does not have the highest of incomes, obviously. He is in the 6 figures. His net worth, I believe, he says, is in the 6 figures.
Okay.
Would that qualify for a decent policy?
Yeah, I can do a if he has it in a 401k, I can do a 401k rescue.
Oh, okay.
Yeah.
So can you,
like if he has 100 grand or better, I can do a 401k rescue and really multiply his retirement.
Can you describe what that is, a 401k rescue?
So basically, I'm just using the funds that's in his 401k into an insurance policy. And,
like you did something like that with Julius, right?
Correct.
Okay.
Correct. So like whatever's in it, we'll put it in a policy and multiply it with not premium financing. We'll multiply it with compounded interest, and depends on his age. I can do it as an annuity or I can do it as an IUL. So if he's over 50, it's better that he does it in an annuity. I can do it for like 5 to 10 years or something into an annuity and really grow it. It'll be a fixed index annuity.
And he also would like to know, once someone buys a policy, how often do you see them change their insurance coverage?
Me, relatively never, only because they'll ask me questions before they do anything. And I tell them ahead of time, don't keep going back and forth looking at this thing grow and all that stuff. Just, each year you're going to have to, we're going to do what's called, not premium finance. We're doing like a particular technique called infinite banking. So like, right. We'll borrow some of the cash money out of 1 year, hold it for a week, and then put it right back in to multiply the cash amount.
So you're again, we talked about this, you're very active with your clients. Yep. When they buy a policy. It's not just buying a policy and, okay, we're done, I'll see you in 50 years.
Yeah, unless it's final expense. Now, I did sell somebody in New York an IUL, and I use it as final expense because New York just has these ridiculous rules when it comes to insurance. So I did a quick policy for somebody for like $100 a month, and they had like a $150,000 or $175,000 death benefit. And no lie, it was like maybe 4 or 5 months later, the woman's husband passed away, and she had no problems collecting the death benefit. She got 150 grand.
Wow. Okay. But otherwise, because
other final expense doesn't go that high. You know what I mean? I just use that policy particularly as a final expense.
But typically, because I mean, you ask the right questions, you put people in good policies,
Yep.
You know how to manage them, you know when to, borrow money from the bank, add money in, take money out. You know exactly what you're doing, how to manage that policy.
Correct.
Which I think is critical.
Correct.
Because the misconception people have is I get my life insurance policy and I forget about it and that's it.
That's what a lot of people.
It's an active investment. It's an active, living, breathing thing that you have to manage.
If you're doing a high level life insurance policy, if you're doing final expense,
sure.
Just even term, just pay your premium, keep moving, because there's nothing you can do with it. Pay your premium.
Exactly.
Yeah.
But that's specifically why you don't do term.
Nope.
Because it's not.
You don't get a benefit from it.
Policy, and you don't get enough benefits from it.
I mean, listen, I make a good commission selling it. I just don't prefer selling it.
So you do have instances where you will sell it.
Yeah.
But it's not your choice, your first choice. You will do it if you're forced to.
Exactly. I will try to dissuade you from it, because what happens is people get information from other people who doesn't have the credentials. That's like you're a married person.
An expert. Yeah.
Yeah. It's like talking to a married, you're giving advice to a married person and you're single.
Oh, that's something I do all the time. Okay. So, all right. How would you describe the best way to save money when buying life insurance, whether it's whole life insurance or term life insurance?
There's no such thing as saving money when you're buying a policy.
You're not, right? There's no way to get a cheaper rate.
No, if you want cheap insurance, just go out and get term. If you want to go cheap, you pay what you get. You get what you pay.
Exactly.
I tell people all the time, I says, listen, while you're at this particular age and the rate is this, jump, because you're not going to see that rate again.
Right, exactly.
You're not going to see that rate again.
It's only there and then it's gone.
You get what you pay for. You want to pay $20-$30 for 500 grand, go and get term. Outlive it, throw away your money where you could have, made money with whole.
Right. Right.
Like if you're paying $30-$40 and you're getting like 300 grand of a death benefit, you might want to spend a little more. You might get less of a death benefit, but more benefits going forward. You'll have living benefits and things like that. Not every term policy. There's some term policies with living benefits, not a lot. But with whole life, like I said, you have you have the ability to have the those benefits, the living benefits, and you also have the ability to create a savings through life insurance.
Exactly.
So in a pinch, if you lose your job and you need some quick money, because it's happened. I've had a friend of mine or two who that happened. I said, go to your policy, pull out the money.
And that can help you pay your mortgage, do whatever.
You use that money for anything. If you do a high level IUL, you can use the cash built from that policy to go buy a business. You can use it to start a business. You can use it to go buy a home. You can use it as a down payment for a mortgage. You know what I mean? Why go to the bank for all of that when you have it? You
already have it.
If you fund it right. You can't do it at $100 a month.
No. Of course
Can't
not.
do that $100 a month. It's got to be some significant money.
No, like you showed, like the 26-year-old who had 100 grand,
You get 100 grand, and I
50 and 50,
50.
and it's going to blow up. I mean, it's funded properly. If you're going to put $100 in or 10 grand in, it's not going to be enough to get the return that you're going to be expecting.
Correct.
Like the one that he's getting.
Correct.
You have to put the money in.
You got to put the money in. So in his case, he doesn't have to. He stopped paying paying for that policy at age 45, and at that point he had 6.6 million in there, and then it's still building compounded interest every year going forward. By the time he's at retirement age and I'm just going to go early and say 62, he has like $20 million in that policy in cash.
Right. Okay.
And it's still going. It's still growing. But if he wanted to use it at any point, he can pull money out of that thing at any point.
All right.
I don't know. Get an airplane. If he wanted to go and get an airplane for $3 million, he can pull out. He can pull money out of that policy and go cash.
Okay. I don't know if this person is messing with me or not, but is there something called accidental death or dismember?
Yeah.
God damn you, Christy. Accidental death dismemberment insurance. That does exist.
It's a clause in a policy. It's not a particular.
Oh, it's a clause. Okay. So what is that? What exactly does that mean?
So if you die by accident, like for argument's sake, the boxer the guy who beat up what's his name last week, the one who broke Jake Paul's jaw.
Anthony Joshua.
he got in an accident. Was it yesterday or the day before?
Yes.
Yeah. 2 people died. That's an accident.
Yes.
They were insured. They'd get paid right away.
Oh, I see what you're saying. Okay. But it's not like his insurance would have to cover them. Okay.
No. If that car is insured, I mean, listen, it's different because it's Nigeria. Who knows what the rules are? But if that vehicle is a rental or what have you, and it's covered, it's insured, those 2 people who died will get their burial taken care of.
And I think that was the one other question. Are you allowed to buy policies out of state? And I think you said no, because you have to get licensed in different states, correct?
You mean, can I sell out of state? So like I can sell I can sell in certain states, but it's not going to take much for me to go apply for the license and get it and then service.
But if someone lives in Arizona and they want to buy a policy from you in New Jersey,
they would have to give me a Jersey address.
Oh, so if they were to get like a PO box in New Jersey, would that count? I don't
want to contribute to
okay. That's all right. We won't go there. All right. All right.
Let's read between the lines on that one. But
yeah, I got you. I
just need a Jersey address.
I got you. So we are going into 2026, and we had talked about this. Your goals right now, if you can get 5 to 10 good policies done a week, that would be what
I would love that.
Your high-end goal.
Yes.
Right there. Okay. Yes. And you're talking about high-end where the income is in the 7 figures. Okay.
Even high sixes.
In the high sixes. Okay. Yeah. If you are able to get 3 clients a week, is that decent?
That's decent.
If it's high enough.
Yeah, absolutely.
If it's high enough. Okay.
Absolutely. I like to shoot for the moon.
And you will do health insurance and the Affordable Care Act once it gets sorted out.
Yes.
Okay. And like car insurance, that stuff you do not do.
That's a separate license. Yeah.
That's a separate license for it. Okay. But
My brother keeps telling me to do both. I just don't have the brain capacity.
I think you do. You memorize the answers for the life insurance test. You just got to memorize the answers for the car insurance test.
Exactly.
Okay. So any advice you would give people going into 2026 involving life insurance before the year begins?
If you don't have it, get it, because every time you turn it down, it gets expensive. So when you make up your mind at 56 years old, it's pricey. It's very pricey. I would suggest get it. If anybody has a financial goal, I would do it through life insurance. So if you're saying that I want to save up money for a house, and let's say I want to buy a $3 million house in a couple of years, you can save up your money for that deposit through life insurance, but it has to be properly funded.
All right. Well, thank you, James. Excellent show as always. Thank you for answering the questions. Remember, go to lutherjamesinsurance.com. You can DM him on Facebook, Instagram, LinkedIn. He's always accessible, and you can contact him at any time. We are going to get him a number of clients in the next year. Jamal should be available, and Joe I will contact, and Julius I am going to have tomorrow.
I'm working with Julius now. So
no, I mean I about the kids.
Okay.
The kids and the parents, because that's the pipeline that I think is going to be valuable. Because he's got 50 kids, the parents, that's what we have to work with. So that's kind of the synergy that I'm looking to build. So we'll do that. But great job, James.
Thank you, sir. Thank you, everybody.
And Luther James Insurance, James Whitfield. Remember, when life gives you lemons, don't make lemonade. Take 2 oranges, throw them right back at life. Down south, we have Julius Williams and the Trench Mob. Julius trains offensive and defensive linemen. They compete in 5v5 tournaments across the country and also go to college showcase camps. Proud to say they were undefeated at every tournament they attended. Every college showcase camp, a member of the Trench Mob was offered a college scholarship. He's in Decatur, Georgia. If you want to work with the best, work with the Trench Mob, www.battleofthetrenches.com. We have Ned Von Young, Freshfold Laundry Company, Chapel Hill, North Carolina. High-end laundry service. They have you book online. You put your laundry out in a clear plastic bag. They pick it up, wash, dry, fold it for you at Land Speed Records. And they also have an online subscription model, weekly or bi-weekly. They offer now a pickup and delivery service, so you can have your laundry done without leaving the comfort of your own home. Again, washed, dried, and folded for you and returned to you within 48 hours. They also have an expedited service. They have deals for college students in the area as well. Check out their website, myfreshfold-laundry.com. We also have James Whitfield of Luther James Insurance. For the last 3 years, James has dedicated himself to the art of financial planning. He specializes in insurance policies, mainly life insurance. He will make you a boatload of money, and he will do so tax-free. He understands the stress that comes with retirement planning. How much do I need? For how long? Do we have enough? Because fear of the unknown is real. To connect with James, you can go to his website, www.lutherjamesinsurance.com. Finally, we have Rob Hill of R. Hill Enterprises, Inc. Rob is an accomplished author. He is a speaker, and he also is an insurance mastermind, along with being a minister. Rob will put you in the right insurance plan for you. He understands the constraints and the rules that go with insurance, but he makes sure that you ask the right questions so you get the right answers. His main objective is to pull people's heads out of the sand, because that is what we're dealing with currently. To connect with Rob, you can message him on Instagram, LinkedIn, Facebook, or go to his website, rhillenterprisesinc.com. Again, he also does speaking engagements. He is a phenomenal insurance agent out of Chicago, Illinois, and you should contact him for any advice, even if you don't want to work with him.